Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Joanna Gallegos. She is the co-founder of Bondbloxx. Joanna, great to see you. Thank you for joining me.
Yeah, thank you for having me, Judy.
So, Joanna, tell me, what are your expectations for the markets in 2022?
Yeah, so I would think it's table stakes to say that the rising rate environment is going to make a very, very different outcome for investors this year. But one thing I think is interesting and will become quite evident in 2022 is that exposures that seemed conservative are now pretty risky. We were looking at duration, and historically we're noticing that duration in broad-based fixed income portfolios is around 4.5 years. Now it's 6.5. And that's a 50% increase in risk in a broad-based portfolio. So that means for the safest, most dependable and defensive parts of your fixed income allocation, you're now about to run into an environment where you'll lose 50% more than you would have just 10 years ago. And I think that that's been a really interesting rise in embedded risks that people have basically tolerated because Fed policy has been very supportive to our markets and economic shocks and downturns, and interest rates have remained low. But now I think when people look at portfolios, they're really going to see that maybe the risk in their portfolios don't match their tolerance or justify their return expectations. So I think that that's going to be a big realization in 2022.
Okay, so what do you think are going to be the biggest challenges this year, and how can investors manage their risk?
Yeah, so seeing through that rising rate environment and the embedded risk that I just mentioned is going to be really critical for investors. So investors should think about doing things differently. They should be more deliberate in the way that they're reconstructing their portfolios as they re-enter the markets or reinvest. They should be thinking very carefully about their broad-based exposures and using new tools because the market environment has changed.
All right, and how should we be thinking about sectors?
So I think what we should be thinking about sectors is we should be paying attention to the dispersion of returns. So volatility is a great light that gets shined on our markets to show you the difference of returns across sectors, across different market segments. And in fixed income, when you look at high yield, we're noticing that that is very true. So two things we notice. One is there is definite dispersion of returns, and two is there's a lot of variability year over year. So in the median return for high yield sectors is around 66%. But the difference between the high and the low of that return over time can be as much as 13%. And that's been very consistent over the last 25 years. So as you're reconstructing your portfolio or you're building an allocation, you would really need to pay attention to some of these dynamics so that you're able to take opportunities of those kind.
Okay, Joanna, thank you for joining me. And that's ETF Leaders, powered by the New York Stock Exchange.